Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, April 25th, 2022, and I'm pre-recording this Trading Places Live for Tuesday, April 26th. Currently, we have futures relatively flat after a nice recovery on Monday. Currently, I'm showing Dow futures up 1 point, S&P 500 futures up 3/4 of 1 point, and NAS futures down 3.5. So literally we've got flat futures. A lot can change overnight, so we'll see what happens. But I really think the market's waiting for some big earnings reports. We'll get into that later in the show. Let's go ahead and go through today's agenda. So we're going to start off with the daily market recap for Monday, then I'll jump into talking technically. I'm going to try and speed through the Dow components, 30 Dow components, try and go through the weekly charts and show you which ones I think still look bullish, which ones I would be very careful with, especially if the market continues to break down. Then we'll get into earnings spotlight. We'll wrap up the show with the 3 you must see. Before we get into any of that, let me take you over to Earnings Beats. If you go to earningsbeats.com and you are new to Earnings Beats, we have a free newsletter. Love to have you subscribe. We have a area on the website. Simply type in your name, email address, hit that subscribe button. This is a newsletter that's published 3 times a week, Mondays, Wednesdays, and Fridays. We try to get it out around 8:30 in the morning, so it's about an hour before the market opens. And there's no credit card required. You can unsubscribe at any time. We'd love to have you. All right, so let's talk a little bit about Monday, because we had a rough end to the week last week. But Monday was much better. We were a little weak early on, which isn't too surprising since we finished on the lows on Friday. So we did set some new short-term lows earlier on Monday, but we rallied into the close and actually finished pretty close to the highs of the day. Dow Jones Industrial Average up 238 points. S&P 500 up 24 points. Nasdaq up 166. Mid caps up 14, small caps up 4. On a percentage basis, Nasdaq, the big winner, up about 1.3%. Looking at the sectors, good news there. The 3 leading sectors on Monday: technology, communication services, and discretionary. And it was actually interesting early in the day when the market was lower. These were the 3 groups that were leading the market to the upside. So we did have some pretty good action. This is what I would like to see maybe over a longer period of time. I don't think one day is going to make any kind of a new trend, but it is at least a start. And if we can continue to see these 3 groups perform better on a relative basis, even if the market does go lower, I would view that bullishly. So these are 3 groups that I would continue to watch. But technology up 1.5%, communication services 1.37%, and discretionary up about 3/4 of 1%. Healthcare also strong, up about 0.7%. And then on the flip side, we had energy, unfortunately, down about 3.3%. It did rally off its earlier lows, tried to hang on to the 50-day moving average, ended up closing just a little bit below it. I think we've got some pretty decent support short term anyway, down around 70. We got close to that on Monday before reversing and finishing back up at 73 and change. So let's watch that 70 level to the downside. I think if we close below that, then I think we could see additional selling in energy. Otherwise, I would expect more sideways consolidation after touching that 70 level. All right, 10-year Treasury yield ended up closing down 8 basis points to 2.83%. We were down as low as 2.76 intraday, so we were down about 14 or 15 basis points, but we did see the yield rally back to the upside as a new wave of sellers came into the 10-year Treasury yield or into the bond market. Right now we're in a stealth move to the upside in the yield, coming off the lows from back at the beginning of March, 1.7%. We got almost up to 3%, which was about a 75% move higher from that 1.7 level. And that was just in about 6 or 7 weeks. But we have pulled back a little bit with the action on Monday. I would watch the rising 20-day, which currently is at 2.67%. I think as long as we hold above that area, I would suspect that we're going to make a run for 3, maybe 3.25% in the short term. All right. On Tuesday, we will get the March durable goods numbers. February, we saw a big drop, 2.2%. We're expected to see March jump back up about 1%. These numbers, the durable goods numbers, tend to be highly volatile. I wouldn't probably pay too much attention unless I was smoothing it out over maybe a 3 or 4 month period, because what you tend to see is a big move one direction one month, the other direction the next month. I think you really need to smooth that data to make it more meaningful. If we exclude transports, March durable goods expected to rise 0.5%. February, we lost 0.6%. February Case-Shiller home price index coming out tomorrow morning. That's expected to rise 1.5% after January rose 1.8%. The big problem I have with a lot of these housing reports is that they're in the rear view mirror. I mean, we're almost into May. We're getting toward the end of April, and here we are talking about the February Case-Shiller home price index, also February FHFA house price index. Numbers very similar to the Case-Shiller, expecting pretty big jump in February, 1.6%. That's what it jumped in January. April consumer confidence, 106.8 is the estimate. March was 107.2, so a slight pullback there. March new home sales expected to be exactly as February was, both 772,000 units. The big number I'm looking at coming into this week, I mean, obviously we have some big earnings reports, but from an economic perspective, Thursday we get the Q1 GDP. Fourth quarter, the final was 6.9% jump in GDP. We're expecting to slow down to 1.1%. We'll see where that number comes in. I mean, that's already scary, talking about 6.9 down to 1.1. But what if it were to go negative? What if it actually comes in negative or less than expected? I think that could jolt the market as well. I mean, we've got the Fed talking about raising rates, and then you've got the GDP potentially showing this massive slowdown, maybe even turning negative. That's a bad combination. So we'll see how it comes out, but Thursday, at least keep that on your calendar. All right. Talking technically, I just wanted to go over a couple of charts. Here's the S&P 500. If I connect the lows from February and March, and I take that slope and I connect the most recent high at the end of March and come down from there, you can see right now we're looking at the channel being somewhere around 44.50 maybe to the upside and down to about almost 3,800 to the downside. I still have a feeling we're going lower. I did like the action short term on Monday, so we'll see maybe if that helps spur us near term for a little bit of a pop back to the upside. But if it doesn't, and we start seeing some big breakdowns in some of the key names, and I'll show you a couple of those when we get to the 3 you must see at the end of the show. But a lot of big earnings reports coming out this week. And I hope that in addition to getting a strong reaction like we did with Tesla last week, that we actually get some buying intraday and not just a gap up and selling. That might be a tall task because not too many companies are coming out with their earnings and just taking off to the upside and continuing to trade higher. Most of them are struggling to tack on any gains to that initial bump up with earnings. So anyway, some big ones coming up this week for sure. All right, 10-year, no, let's go back to the, Nasdaq 100. So here on the Nasdaq 100, this is a weekly chart. So if we look back over the S&P chart I just showed you, this was a daily chart going back the last few years. But now I want to look at the Nasdaq 100 on a weekly chart. And I see failure at the 20 and the 50 moving average, 50 week moving average back in late March, early April. And now we're rolling back over, and 13,000 is a pretty big support level. We were as low as 13,239 today. So if we do roll back over again, just watch that 13,000 level, because if that gives way with a VIX already very elevated, we could see impulsive selling and a very, very swift move to the downside. You have to be on guard for that right now with volatility increasing recently, and key support from 2022 drawing closer and closer. Internet stocks, I mean, we had a nice recovery today. That was good. But when you look at this weekly chart, it's dropping. It's below the 20-week moving average. And so far in 2022, when we've been up to test that 20-week moving average, we failed. And we keep going down, setting new lows, which we just did last week. And throw in the fact that the weekly PPO has set a new low, the lowest level we've seen in the last 5 years. And I'm just thinking that for now, we need to be very cautious with the momentum so weak to the downside. All right, next up, I wanted to show you the software group. So software also had a pretty good day today, but we're down here at this key level. If we lose 4,500 on this index with the weekly PPO pointing lower, that would not bode well for the market. So keep that in mind. And then finally, I'm just going to pull up the semiconductor, show you this one, another big chart to watch. We have set new recent lows. I think we're probably heading down to 6,000 on the semiconductors. We bounced, saw 7,100 on the close on Monday, but I'd be careful. I think 7,500 to 8,000 is going to be a major area of resistance if we do have a short-term pop to the upside. Anything back up in that area, I would be looking for a reversal. Ultimately, like I said, maybe moving back down to 6,000. All right, that's it for talking technically. I want to go through the Dow components. I'm going to try to go through these very, very quickly. We're going to start off with Apple. And what I'm looking at mostly on these charts is I'm looking at price action relative to the 20-week and the 50-week moving average. And I'm also looking at the PPO, the weekly PPO. I mean, if you're able to keep your weekly PPO positive, I think that's bullish, considering that the overall market is struggling to, to right the ship. It's, the weekly PPOs on the S&P, the Nasdaq, all below the center line, and everything seems to be weakening. So Apple, you can see, is actually trading with its weekly PPO positive, and its 20-week moving average is above the 50, and its price action still above the 50, although it's just a little below the 20. Big earnings report this week for Apple. We'll see what happens there. But I think that 151, 152 level is going to be very, very critical on Apple. We do want to hold that. We're still well above it, but got about $11 to spare right now. But I would be careful if we lose that level from back in March, around 151. Amgen. Now, Amgen, you can see the weekly PPO has definitely picked up, very strong. However, we're hitting overhead price resistance. So I think the 250, 260 area right in here is going to be a difficult area to break through. If Amgen can do that, that would be great. Otherwise, I see it pulling back maybe the 20-week. American Express is still hanging in there pretty well. Back in February, we went up, set that high near 200. We pulled all the way back to 155. I think we're in a trading range now. So I wouldn't be surprised 160, 165 to the downside. Watch 200 to the upside. I think that's your trading range. Boeing. Now, Boeing, you can see the weekly PPO below the zero line. We're trending below the 20-week, which is below the 50-week moving average. I think this one continues to drift lower. I'd be very careful with Boeing. Caterpillar got close to the high we saw almost a year ago. So back in June of 2021, we hit 240. The high last week was up at about 236, 237. But we have pulled back, and we're trying to bounce off the 20-week moving average. We finished at 216.70 today. That 20-week is down at 210. So we do have a little bit of room to the downside, but I really want to see Caterpillar break above 240. We got some work to do there. Salesforce.com, no thank you. Been trending down. It's below its 20-week moving average, which is below its 50. The PPO is horrible. I'm not a big fan here of Salesforce. Cisco, we did have the low from November down about 50.5, and that's where we were today. Low is 50.54. So that's our key area. We need to hold that level. Cisco's PPO is broken into negative territory, so we don't want to lose price support. Chevron, of course, this has been one of the stronger stocks in the Dow. It is in the oil patch and very strong of late. Well, when I say of late, last 6 months, going from about 90, 95 bucks up to 175. It has pulled back, but it's still trading well above its 20-week moving average, which currently is at 147. Chevron closed today 157.49. Disney looks very weak to me. It continues to trend lower. It was not helped by Netflix's miss last week in its subscribers, moving lower for the first time since 2011. I think that's having an impact on Disney here. Not to mention, I think the market overall is pricing in or starting to price in the potential of a recession. And as a result, Disney continues to trade below its 20, which is below its 50, and its PPO is very weak. Dow Holdings recently set a new high. I think this is one of the stronger stocks right now in the index, continuing to trade off that, bouncing off that 20-week moving average. That's down at about 61 or almost $62. And the stock finished on Monday at 68. So we got a little bit of room to the downside. But I think as long as 62 holds or that 20-week moving average, I think Dow looks pretty good. That weekly PPO continuing to rise. Goldman Sachs, no thank you. It has broken back down since the beginning of the year. It has been weak. It is trading now below its 20-week. It has been since the second or third week of the year. Any rally has been rebuffed at that 20-week EMA. That's currently up at 344. So we've got to get through that level before I would consider the stock. Home Depot. Home Depot trying to hold on to some support. It broke out in March of 2021 above the 280 level. And then just maybe a little bit more recently, almost a year ago in June, on a pullback, got down to about 295. And that's where we've been holding the last 3 months, 295 to 300. We finished at 304 and change on Monday. I think Home Depot has some work to do to get back through the 20-day, but it does have some pretty good support in this 280 to 300 area. Honeywell, well, it has been trying to hold on to gap support, which is right at 180. It's been doing so, currently at 190, 182. That's where we finished today. But it is trending below the 20-day. So it seems like we're on a crash course for another test of that 180 level. We'll see if we hold. IBM, I talked about this one in my show for Monday at earningsbeats.com. Depending on the time frame you look at, IBM could look bullish or bearish. I think it has made a big move. I said in the show yesterday, and I'll say it again, I think IBM's got to get through 145. That has been a long-term resistance area going back 10 years or 9 years throughout this secular bull market. We have not been able to get through 145. So lots of tops, as you can see on this daily chart, or excuse me, on this weekly chart, right around the 140, 142 level. But again, you go back 8 or 9 years, 145 is a big level, and that's what I need to see IBM break above. Intel trending lower. I think it's in a channel. I believe it's going down to test these lows somewhere in the 40 to 42 area. We closed at 47 yesterday. I'm not interested. Johnson & Johnson, one of the stronger stocks in the market right now. It actually went up again today, even though the market was weak. Johnson & Johnson trending up above its 20, which is above its 50. PPO looks great. This is certainly one of the better stocks in the Dow. JP Morgan, no thank you. Banks struggling right now. JP Morgan's been a very weak performer relative to the banks. It's trading below its 20, which is below its 50. The PPO just keeps shooting lower. This one's got some work to do before I'd be interested. Coca-Cola just came out with their earnings. They had a very nice report beating top and bottom line. The stock gapped up and then pulled back, but did still finish up on the day on Monday. I think this is another one that looks pretty good. It's a leader in the soft drink index and also soft drinks relative to the S&P doing well. So I see Coke continuing to perform well. Watch that rising 20-week moving average for support. McDonald's, well, we set our peak to open the year at 270, and then we came down at the end of February, beginning of March to set a low just below 220, and now we're at 250 right in between. I think we're going to consolidate. I actually like what's going on McDonald's relative to the restaurants, breaking out to new highs. We're at a 5-year relative high, or well, at least 3-year. relative high versus the restaurant group. And so you do at least have one of the stronger restaurants. The problem is restaurants overall have not been very good. So I just think we're sideways consolidating right now. I'm not bearish McDonald's, but I'm not bullish either. I just think we consolidate. Let's see which level breaks first. 3M, again, no thank you. Been trending lower. Had a very, very difficult January and February. I think it's in a bear flag. I'm just not seeing anything that's exciting to me. It needs to hold 140. If it fails to hold 140, it could see that March 2020 pandemic low, which would be all the way down close to 110 or a little below the 110 level. Merck, another one in the pharma space that's doing very well. Does have overhead resistance around 89 or 90. We finished at 85. I think we're just trading with a little bit of overhead resistance close to 90, and then our rising 20-week EMA, which is currently at 81. That's your support area. Overall, though, I do think this one continues to trade pretty well. Well, Microsoft, tell me what their earnings are going to be, and I'll tell you what to do with it. I mean, I don't know. This is continuing to be a pretty good leader in software, but it's at its support area around 270. We've tested this area multiple times over the past 2 to 3 months, and we did it again today. We got as low as 270. If we close below 270, be careful, but watch earnings up this week. Nike trending lower under its 20-week, which is below its 50. PPO not strong. I would be careful with Nike. Procter & Gamble looks pretty good to me. I think I see a nice little cup here. Move up beginning of the year. Then we came down beginning of February, kind of formed a little bit of a V more than a cup. It's not really a rounded bottom, straight down, straight back up, but I still like the pattern. We got to get through 65. That's the key level there. Breakout above 65 would be bullish. Travelers also just recently made a nice move up to 190. It's pulled back, testing its 20-week moving average. This is actually a pretty good reward to risk trade from the current level on Travelers. If it closes below 170, I'd be out. But 174, it's just above the 20-day, 20-week EMA, which is 172. So I actually think this one could run back up to the recent high. I like the reward to risk here. This is one of the few that I actually would be interested in potentially buying at the current level. United Health Group's been very strong. It's been pulling back. I think we could see a 500 drop down to 500, which would be close to that rising 20-week EMA. But this is another strong stock in healthcare, one of the stronger stocks in the Dow. Visa, well, we got a double top, came in at about 235 from the October 2021 high and the January 2022 high. The recent lows, we have seen 190, 195 providing support. So I think we're just in that trading range right now on Visa. And Visa will be reporting this week. Verizon had a breakout last week. We got up above $55 for the first time in almost a year. And then literally in just a couple of days, we're right back down trying to hold on to $50. $5 swing on Verizon is a pretty big move. And that's occurred just between last week and this week. I see it just going sideways. There are a lot of downtrending stocks that look worse than Verizon, but I also see a lot of them that still look better. I just think this is in no man's land. I'm not interested. Walgreens Boots Alliance, major support, $43, $44. That needs to hold. Walmart, this is actually another nice looking chart. We recently had the breakout above a triple top near 150 on that weekly chart. So I think that bodes well. Any kind of a pullback to the rising 20-week EMA, which is at 147, I think that would provide a great entry point into Walmart. So that's it. That's your Dow 30. As far as earnings, let's move into the earnings spotlight. Just a couple of companies here I wanted to mention. First up, Cadence Design Systems after hours on Monday. They did come out. They beat earnings estimates 117 versus 101. They were up 5.5% after hours, which would be about $8 or so, maybe $8.25. I don't think we're going to see that breakout above 167 though. I just see more sideways consolidation, but moving up 5.5% after earnings is better than the alternative. The other company I wanted to mention after hours was UHS. This company actually came in, missed earnings estimates. They posted earnings of $215. The market was expecting 247. This is a company in the healthcare providers group that's already been extremely volatile. End of last week, big move down, then the big rally back. Well, now we're looking at a 12% hit after hours. So we could be down, maybe getting closer to this key support level around 125, maybe even below that level. If we open below 124, 125 tomorrow, then I think that brings into about 116 into play, that support level from the low back at the beginning of December of 2021. All right, other companies that will be reporting on Tuesday: Microsoft, I mentioned Microsoft, Google, Visa, Pepsi, UPS, Texas Instruments, Chipotle, Tech Resources, and many others. Wednesday, Facebook or Meta Platforms will be out, along with Amgen, Boeing, PayPal. Thursday, big day: Apple, Amazon, MasterCard, Lilly, Intel, McDonald's, Caterpillar, KLA, which is a semi-equipment manufacturer. Be a good thing to see what's going on with those semi-equipment companies. So KLA will give us that information on Thursday. And then Friday, a couple from the oil patch, ExxonMobil and Chevron. So lots of earnings coming up here over the course of the next few days. And the big Nasdaq companies, many of them coming out this week. Next week is going to be the biggest number of companies, largest number of companies reporting. All right, let's wrap the show up with the three you must see. I'm going to start off with Cisco. So looking at Cisco here, I pulled up a 2-year chart, and you can just see it rallied and reversed today, which was nice because it's got some pretty good support right at about 50.5, 51. We got as low as 50, 54, and then finished close to $52. If this moves down below 50, then I think you've got a lot more sellers potentially ready to jump on board. So Cisco, let's watch that 50 area. Microsoft, okay, earnings tomorrow. I talked about it already when I went through the Dow, but I just wanted to point out again, this 270 level right here, very, very significant support. We'll see what happens. And then lastly, PayPal, I mentioned, will be reporting earnings. Look at the ski slope on this chart. I don't know what they're going to come out with, but based on what I'm seeing right here, it probably is not going to be good. A stock doesn't drop from $300 in July to $87 the following April with nothing going on. I mean, I know the market's been weak, but PayPal has been extraordinarily weak. And look at the AD line. I know this is a weekly chart, or actually, no, this is a daily chart. So look at that daily AD, which in October last year just began to completely fall apart. I see distribution. I see weakness. I see very, very bearish momentum. So I don't expect a whole lot coming out of PayPal. Maybe they'll report some bad news. Maybe we set a bottom with that. I don't know. But I would not be looking for a whole lot of great numbers or good numbers out of that company. All right. Again, go over to Earnings Beat, sign up for our free newsletter. We'd love to have you. Be careful out there. Let's see what happens with these earnings coming up. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.